Hello guys, welcome back. Do you believe that investing in stocks is too very risky? Then this video is for you. In this session, we will be discussing whether we should invest in stocks or not. So let's begin our session. Is investing in stocks too very risky? I want to start this session with a question. I'm having two companies here. One is the Bajaj Finance, another one is the Suzlon. Bajaj Finance present share price is 5,424 rupees, whereas that of Suzlon is 6 rupees. I want you to answer which one would you choose for your portfolio. You are having some amount of money and you want to invest in stocks, and you are having two companies here. One is the Bajaj Finance and Suzlon, and you have to choose between them. Before you choosing them, I want to just brief you about the operations these companies are involved in. Bajaj Finance is a leading NBFC in India. NBFC stands for non-banking financial companies. Basically, they give loans to small retailers. It may be the loan which it is giving for the two-wheelers you buy, the three-wheelers, the gadgets you're buying, the smartphones, the tabs you're buying. So basically, it is involved in lending business. So it lends loans to small retailers and makes profit out of that. Whereas Suzlon is a leading wind energy producing company. Suzlon is a leading wind energy producing company. Now I want you to choose between them. Obviously, many would be interested in Suzlon because it is having less share price, and they want to buy more number of shares for the same amount of money for their portfolio. But let us analyze both these companies based upon their previous results. Bajaj Finance Limited. So as you can see on your screen, I'm having the graph of the share price of Bajaj as of NSE on 1st Jan 2005. The share price of Bajaj Finance was 12 rupees. In the next year, 6th March, the share price was 55 rupees. 1st Jan 12 rupees, then 55 rupees, then as of 1st Jan 2015, so exactly after 10 years the share price was 339 rupees. From 12 rupees per share till 339 rupees per share in a tenure of 10 years. And now we'll see the current share price of Bajaj Finance company, that is around 5,424.70 rupees as of 11th March 2021. You can see that the first share price was 12.25 rupees in the year 2005, and now it is 2021, and the current share price is 5,424.70. Exactly after 16 years, the share price has went up by 450 times. Now we'll analyze the statements of Bajaj Finance. The net profit is increasing drastically from 89 crores. Everything is in crores, from 89, 247, 406, 591, 799. So the net profit is going on increasing. Now we'll see about EPS. EPS is earnings per share. EPS can be easily calculated by net profit divided by total number of shares. Even the dividend payout is good. EPS is also increasing, dividend payout is also good. The compounded sales growth is also showing you a profiting sales growth. It is a positive sales growth from 23%, 26%, 33%. Even the profit growth is positive. So is the case with the stock price CAGR. Stock price CAGR. CAGR stands for compounded annual growth rate. In 1 year, it is 173%. Your money is getting compounded at the rate of 173%. In 3 years, it is 43%. 5 years, 48%. 10 years, 57%. So this company, Bajaj Finance, is getting your money compounded at a very good rate. So on an average, you can take that your money is getting compounded at 40% per year. Let us take an example. In Bajaj Finance, if you are invested 25,000 rupees at the rate of 40%, that is nothing but a CAGR, for a tenure of 20 years. That means you left your money untouched for 20 years. Then your present earnings would be 2.09 crores. You just invested 25,000 and you are earning 2.09 crores. This is really awesome. Now let's take another example, that is about the company ITC. ITC is also a divergent company. It is investing in FMCG. FMCG stands for fast moving consumable goods, that are the daily goods we are consuming. It is also involved in tobacco business and also in hotels business. If one had invested rupees 10,000 rupees in ITC shares IPO in the year 1970, if a person had invested 10,000 rupees in the year 1970, then his present outcome would be 23.50 crores. That is a huge amount. Now let us analyze the another company, that is the Suzlon. As you can see here, in 1st Jan 2008, its share price was 473.57 rupees. That is nothing but the share price of Suzlon as of NSE in the year 2008. Now let us see the current share price of Suzlon. It is just 6 rupees as of 11th May 2021. In 15th October 2021, it was rupees 2.73. 1st Jan it was 473 and now it is just 2.73. That is a huge decline in the stock price. This is an alarming sound. So as public investors, we are having shares of companies which are yielding us negative returns rather than that of companies which are multi-baggers. This is a very important statement. We are not having any knowledge about which share we should invest in. So we are investing in the companies which are yielding us negative returns rather than companies which are multi-baggers. So as investors, we should first fundamentally analyze the company. We should fundamentally analyze the company, first point. Then we have to get to know the nature of the business of the company, second point. Third one is that we should see the company's management. When all the check boxes are ticked, we should invest in the company. So as investors, we should take care of the fundamental analysis of the company, the nature of the business and the company's management. In our future lectures, we'll be putting on a full series about how to fundamentally analyze that company, how to see the profit and loss statement, how to read the balance sheet, how to get on with some of the ratios such as P by E ratio, P by B ratio, the book value ratio, earnings per ratio. There are interest coverage ratios. So there are quite a few ratios which were really very helpful to fundamentally analyze the company. So compound effect is the eighth wonder of the world. One who understands it gains it, and one who don't pays it. In stock market, we are getting into the conclusion now. Stock market is not as risky as long as you drag yourself into risk. Stock market on a long-term investment has given wonderful outcomes. So compounding of money works only on a long-term basis. Warren Buffett once told, when Jeff Bezos asked him, why are your principles being so simple, people do not follow them, then Warren Buffett replied to him that people do not want to get rich slowly. So that is nothing but compounding of money will make you rich. Being patient and investing regularly will surely make you a very good fortune. But we as long-term investors should focus and be disciplined on some aspects. That is about how to understand the company, when should we buy the shares, when should we sell the shares, when should we book the profit, when should we stop loss. We should be thinking all about these aspects, and in our future lectures we'll be surely talking about them. So stay tuned, subscribe to our channel, please like the video. Thank you one and all.